Now, there's a lot of central bank action that's taking place this week. This time, it's South Africa's turn. The Reserve Bank over there has actually lowered the country's forecast economic growth rate from 1.2% to 1% for this year. It's also kept its policy rate on hold at 7%. Now, that decision follows downgrades of South Africa's sovereign credit rating, which is, of course, cut to non-investment or junk status, if you will, by both Fitch and S&P after a shock cabinet reshuffle by President Jacob Zuma. Now, with Moody's yet to deliver its verdict, concerns about further downgrades have effectively outweighed an improved inflation outlook. Consumer inflation did ease back to about 5.3% in April, back within the bank's range of about 3 to 6%. Low food inflation was a key driver, and the drought is now over. So that, looking forward, looks fairly good. But the bank is concerned about the impact of a further downgrade and unexpected global shocks and the effect those will have on both the rand and inflation.
The rand remains a key upside risk to the forecast. The rand has, however, been surprisingly resilient in the face of recent domestic developments. This is partly due to offsetting factors, particularly positive sentiment towards emerging markets and the improved current account balance. The current level of the exchange rate at below 13 rands against the dollar is slightly stronger than at the time of the last meeting and stronger than that implicit in the starting point for the real exchange rate assumption. The outlook for the rand, and therefore the risks to the inflation outlook, will be highly sensitive to unfolding domestic political uncertainty as well as decisions by credit ratings agencies. The rand could weaken significantly in the event of a worst-case ratings downgrade scenario that could result in South African government bonds falling out of global bond indices.
All right, then, so let's dig deep into, of course, the details of that particular decision. Sumitra Naidoo joins us now live from Johannesburg with a lot more. Sumitra, growth forecasts, not just for this year, but for 2018 and 2019, they were all cut much lower. What's the rationale for that?
Well, Rama, there are still concerns about the business environment and the consumer environment. Business activity is still subdued and business confidence remains at very, very weak levels. Corporates are not investing as easily. Many are worried about the political environment and how that's affecting the economy. And because of this, we're also seeing a reluctance to employ people. And even though employment has eased just, by a fraction, unemployment remains one of the highest rates in the world. This, of course, is also impacting spending. So we're seeing it also in company results. Consumers are cutting back. So the economy is still on very shaky ground. And, with declining investment, there's little room for growth. Manufacturing is still under enormous strain. And of course, the ratings downgrades and its impact on the economy adds to this pressure. The governor spoke of this quite a bit today, as we heard in that clip. With a possible further downgrade as well, growth is likely to remain very weak.
Indeed. So food inflation is looking fairly decent. It's forecast to decline as we go into the second half of the year. The effects of the drought are receding as well. Is there any room in any forecast for a cut in the policy rate, or is the threat of another downgrade, in this particular case by Moody's, enough to say, hang on, let's keep rates where they are?
Well, that's it. There is room for a rate cut. And I think if we didn't get the downgrades, the two that we've received already down to junk, I think there would have been a rate cut this time around. Inflation is now back within the target band of 3 to 6%. The rand has firmed up nicely. Oil prices are still low and could remain at these levels or even slip further. The outlook is looking a lot more favorable for a rate cut, but it's the risks that the bank is worried about. There are too many uncertainties, not only domestically but internationally as well. The economic environment is still very unpredictable, and the governor alluded to this when he spoke this afternoon, saying that there are just too many concerns. There's issues in Brazil, political uncertainty there, other emerging markets also looking a little bit shaky, and of course the US as well. We don't know what's going to happen in terms of their interest rates going forward. If anything happens there, if they do decide to stick to that interest rate hiking cycle that they began on this year, that could be detrimental for the rand. So the bank decided to err on the side of caution and keep rates unchanged at this stage, even though there is quite a bit of room for rate cuts.
Indeed. We'll have to leave it there for the time being. Thank you for the update. That's Sumitra Naidu, of course, live in Johannesburg, South Africa.